traders and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter, and here's what's coming up on today's program. Barclays surges as it vows to go on a major cost-cutting drive and return at least £10 billion to shareholders in the coming years. China ramps up support for the troubled property sector with its biggest ever cut to key mortgage reference rate, raising expectations for more aggressive measures to come. Plus, America warns against an Israeli assault on Rafah in a draft Security Council text as concerns grow about the humanitarian situation in Gaza. We'll be speaking to the former Irish president and chair of the Elders, Mary Robinson, about the growing global risks. Don't miss that interview, 9:30 a.m. UK time. Now let's take a look at the European markets map. A lot of focus, of course, is what's been happening in the U.S. Again, European stock, but also I would point to U.S. equity futures. Always a bit of a linkage between the two. Seem to be very cautious. So they're a little bit down. Again, a lot of cautious mood permeating the markets, despite some of the encouraging news that we had from China saying that they will support or put in place measures to actually support their ailing property sector. Now, I'm looking at miners. They're leading basic resources lower. I'm looking at Anglo American, Rio Tinto, and this is after a slump in iron ore prices. You can see the FTSE 100 practically unchanged, the CAC 40 over in France gaining 0.3%, but then we're seeing red elsewhere. For example, the DAX 0.3% lower. Earnings from Bellwether Nvidia on Wednesday will really provide some of the clues or some of the impetus possibly for further rally, or certainly a new impetus for equities as investors now trying to assess the strength of the global economy. So to talk about all of this, we're joined by Raffaella Tenconi, the founder and chief economist at ADA Economics. Raffaella, thank you for joining us. When you look at a lot of the concern out there and what the markets are telling us, I don't know what the catalyst actually for market economics is. I know we look about inflation, we look about everything that's happening with the Fed. Are you expecting inflation to come down?
Good morning, Francine, and thank you for having me. Well, actually, let me start a step back. I think the economy in the U.S. is really strong. I think growth will definitely be above 2% this year. But when you look at the inflation profile, you know, some of the upward surprises that you saw in January and probably in the next few months, some of it is due to stickiness of services inflation. Some of it is the Suez Canal disruptions. But we think inflation will be at and below 2% in the second half of the year in the US. So it's broadly speaking on track with the Fed mandate.
Rafael, when you look at markets, and I know there's a lot of concern about debt levels, there's a lot of concern about the next catalyst for treasuries or actually some kind of auction going wrong because of the debt levels. Like, is there any market event, any credit event that you focus on and worry about?
To be honest, the main thing that I worry about right now is the timing of the Fed cuts, because I think that very much shapes the labor market into the second half of the year and into next year. That, to me, is the most critical bottleneck we have right now, because when you look at auctions and debt levels, in my view, they are supported by the fact that we live in a world where there is a huge search for yield. So I don't think you will see auctions really going badly. But on the labor market, although I told you that U.S. growth is strong, when you look at the granularity of data, the labor market in the U.S. is weakening, for definitely. The number of unemployed is going up, which is historically a very honest leading indicator. So to me, what you're observing is that as long as easing comes by June, doesn't have to be huge, but it has to happen soon, then the scale of the number of unemployed will be quite limited, and we remain in this soft landing scenario with quite a buoyant 2025. If instead the Fed... Tell me.
No, I mean, is the concern actually that they take too long to cut? Would this be a policy mistake?
Yes, if they take too long to cut because they interpret the data as being still fundamentally bullish, then by the time they cut, whether that is September or even December, you would have ignited so many job losses in the economy that then we're actually looking at a much bigger problem, definitely in 2025.
Rafaela, the concern I have is when you speak to central bankers, and this is, I guess, because of the complexity of the kind of world economy that we have right now, it's very difficult to pinpoint how much inflation is coming down thanks to central bank action. I mean, are we talking 30%, 40%? And the transmission mechanism, right, seems so much longer. So do you worry that we're looking at the wrong numbers?
Yes, we are measuring inflation incorrectly, I think, or rather incompletely, not incorrectly, so that it's creating a divergence between what people perceive to be inflation and we're actually measuring inflation. And this is a global problem, by the way, not just the US. But that, to some extent, is not exactly the main problem that we have at hand, because we do have a specific measure that the central bank targets. And ultimately, even if I believe that inflation is different than what we measured, the focus for monetary policy is still the measure. But what I think is happening is that this change between what is real inflation and what we measure inflation fuels discontent. Mm-hmm. So it has political ramifications, changes consumption, in Europe in particular. And ultimately, it's distortive in the long run, right?
So what can you tell us about the EU? I know you're expecting no real improvements in PMIs. Will we see cuts from the ECB before the Fed because of the situation here on the ground? And does that make a difference?
In our assessment, Fed and ECB cut both in June, because we think that is what fundamentally should happen. And the magnitude of the cuts in 2024 is similar, is 100 basis points in our view. The implication of that, though, is that in the US, with 100 basis points of easing, you still have an economy that is going to largely outpace consensus expectation in 2024, maybe even 2025. And in the Eurozone, with only 100 basis points of cuts, they'll be at best stagnant, if not worsening, in 2025. So there is a euro-dollar implication that is very significant.
I was going to ask you actually about some of the currencies. What's your call on euro-dollar from here until the end of the year?
We expect it at 103 by the end of the year.
And then the great unknown is also what happens to Japan. How much do you look at Japan to see what they can or can't do? I have so many market participants saying, look, this is Japan's year.
Well, to be honest, Japan is not our primary focus. But from a perspective, like when you compare Eurozone with Japan, I think Japan more or less has a clear policy strategy, both on monetary policy and fiscal policy. It also benefits from the friendshoring momentum, so to speak. So Japan, it is Japan's year that after so many years of not really knowing what is going on, everything is going in their favor. Whereas in the Eurozone is really a year of transition, if not total obscurity, because you have funding costs that are too high to fund the business investment that they need. You have a lot of elections, with the European elections and the German elections coming into 2025. So there is real lack of clarity on what policymakers really want to achieve.
Rafaela, I have a viewer question. I think it's actually one of our regular viewers. So thank you so much for writing in. And they're asking you this question, Rafaela, which is basically, if you think the Fed is taking too long to cut rates, and you worry about some of the U.S. regional banks, and of course the refinancing of commercial real estate debt, could it all go wrong?
Yes, it could go wrong in 2025, definitely. I mean, you have to accept that there are quite a few lags. So I think 2024 ultimately will still be a good year. But I think if the Fed overestimates the strength of the economy, especially on the labor market, you will end up with a very weak 2025, and especially bankruptcies in the banks and the corporates that essentially fundamentally have too much of a weak model.
Rafaela, thank you so much, as always, for joining us. Rafaela Tenconi there, the founder and chief economist at ADA Economics. Now, Capital One has also agreed to buy Discover Financial Services in a $35 billion all-stock deal. The takeover creates the largest U.S. credit card company by loan volume. Now, it also ranks as the biggest merger globally so far this year. And you can see Capital One pre-market down 3.8%, Discover Financial 14.6% higher pre-market. Coming up, we're joined by the chief executive of one of the world's biggest shipbuilders, Fincantieri. We discuss the demand for commercial and defense, as well as rising geopolitics. This is Bloomberg. Now, the shipping industry is in the spotlight with heightened geopolitical risk across the globe, putting, of course, more pressure on transport routes and supply chains. Well, Fincantieri is one of the world's largest shipbuilding groups with a focus on cruise vessels, military ships, and offshore wind vessels. Now, the firm also says the underwater world is set to be a pivotal arena for security and technology worth around 400 billion euros. So let's discuss all of this with the company's chief executive, Pierroberto Folgiero. Thank you so much, Mr. Folgiero, for joining us. There's so much going on actually in your space because of cruises and because of defense. Can you give us, first of all, an outlook for the cruise ships? So we had COVID. That was a tough time. Are you seeing new orders coming in?
I believe there are. First of all, thank you for having me. I believe we are in very good situation because the occupation rates are back to the level before COVID. So passengers are there. Revenues yields, so revenue per passenger are at the level of pre-COVID. And I have to say that all the cash generation dynamics of those companies are back to a level before COVID. So there are the good preconditions for investment to come.
So give us a sense of, I know there's a lot of talks about a possible agreement, for example, with Carnival and an order for 5 billion euros. Is that something that you can confirm? Is that close?
We have a long-standing relationship with Carnival, who is a long-term client of Fincantieri since ever. We just delivered Sun Princess, which is the biggest ship ever built in Italy, as well as the first with a full engine room with LNG. Having said that, we prefer not to comment on current deals. We are committed to provide energy transition solutions to all our cruise customers, and we enjoy relationship throughout the market in this respect.
But can you confirm that orders are pretty strong? So we were just saying, I come from Genova. I mean, it's amazing when you look at some of these ports and you have like 5, 10, I mean, massive ships. They're like, I mean, I've never seen anything so big. Are you going to see more orders for cruise
sure,
ships?
There is a very good momentum on the market, exactly for the reason I was telling you before. So financial conditions are back to before COVID. Economic performance is back at the same level before COVID. All in all, the market is growing. The value for money of at sea kind of holidays vis-a-vis onshore equivalent holidays, the value for money of the two are giving a good momentum to cruise sector.
Can you give us an outlook on the wind offshore sector? So how much will that grow by?
I believe it's another very, very nice tailwind for our business. You know that the offshore wind is the technology of choice. If you want to increase renewable energy production, our ships are the most sophisticated, are the one with more technology, either for the construction of wind farms and for cable laying, which is the other very important specialized vessels with respect to which we are envisaging a lot of growth.
So how much growth? Can you quantify how much in terms of orders?
Let me say the order book is being much higher than the revenues of the current year. So all in all, it means that there is a good momentum to have long-term visibility on these kind of revenues and production levels.
So how much are you planning to invest in? And again, if you can quantify, I mean, could that double actually in the next 3 to 5 years?
Our target in our 3 years business plan is to double the revenues for this kind of business vis-a-vis 2022.
And so that would be a bigger, I mean, when I look, and we'll talk about defense a little bit, but when you look at Fincantieri and basically where the revenue parts are coming from, how much will, offshore wind be part of that?
I consider that our current level of revenues is in the region of 7.5 billion. And the offshore wind ships kind of revenue will be 1 billion, 1.5 billion.
How much are you expecting in terms of defense spending from Italy, but also the European Union?
I believe that this is the era of defense. I believe that we are in front of a new geopolitical cycle whereby our historical partners, such as the Italian Navy and US Navy, are in the process of accelerating their investment program. On top of this, I believe there is a lot of room for exports, obviously along the line of the Italian and European geopolitical platform, but there is a big demand for naval assets in Middle East and Southeast Asia, i.e. the two theaters that are quote-unquote overheated because of the current geopolitical dynamics.
Can you also talk to us about the underwater, basically, security? So what does that look like? And is this cables to service what sectors?
We are very, very focused on this new domain. I believe that is very similar to what was the space 40 years ago. So there is a lot of technology to be validated. There is a lot of new solutions and new needs to be fulfilled. Our idea is to start from submarines. We have a very long-lasting experience in building submarines. We built more than 180 submarines in our industry. So if you go underwater today, the first thing you meet, it's a military naval submarine. On top of it, there are a lot of technologies developed by the oil and gas sector for the management of operations in offshore subsea. So the combination of those two set of competencies will create the initial block of our competencies in the underwater.
But how many more submarines globally are you expecting there to be in 5-10 years? Again, geopolitics has probably never been so concerning. Are you expecting a lot of basically big major economies to just weapon up?
The underwater will be driven by two factors. First of all is the submarines business. Submarines are expected to become smaller, up to drones of 9 meters, 3 meters, unmanned 9 meters, for sure 3 meters unmanned drones. The mission will be initially the new doctrine of the Navy, according to which a military ship is a mothership, and all those items are connected and interconnected for a common task. Once you have validated this set of technology, including the telecommunications, which underwater are very different, it's all about acoustic and optic. But once this system is validated, then our vision is to go with a dual strategy to protect infrastructure, which is the first need of the underwater, telecom, and seabed mining.
So these would be basically like small submarine drones, right, that would gather intelligence and send it back to the mothership. How much would they cost?
Come on. I don't want to unveil our numbers today, but what I can tell you is that the whole market of the underwater until 2030 is in the region of 400 billion. So there is business for a lot of new technologies.
So interesting. Thank you so much for joining us today. That was Pierroberto Folgiero, the chief executive of Fincantieri. Now, coming up, Barclays soars after announcing a major cost-cutting drive with an aim to return at least $10 billion, or actually £10 million to investors. We'll have plenty more on the banking story next, and this is Bloomberg. Now, Barclays shares surging this morning after it said it's going on a major cost-cutting drive in an effort to boost returns. Now, announcing a restructuring, Barclays says it will reduce costs by £2 billion by 2026. Now, the British bank plans to return £10 billion to shareholders over the period. Now, for more on all of this, we're joined by Bloomberg's Tom Metcalf. Tom, I guess it's a relief for a lot of management because their share price was under scrutiny. They hadn't been doing great. And then, boom, they're cutting costs, returning to shareholders, and their share price is up.
Yeah, I mean, certainly they'll be happy the share price is up. It would have been pretty awkward if it had fallen or stayed fairly flat. I mean, I think just to put that in context, though, Barclays shares over the past year before today were down something like 15%. So in some ways, they've still got a way to recover. But no, I think it's been an interesting morning for them. They laid out pretty clearly their strategy. And sort of my takeaway is, as we sort of expected, this is not some massive overhaul of Barclays. Barclays won't change from the bank we kind of know it. Instead, it's very much a look to scale up existing businesses like retail, the cards payment, while keeping the investment bank but perhaps making it a relatively smaller part of the bank.
So what will the changes actually look like in practice?
Yeah, I think that's the interesting thing. So what they're trying to do is get returns up at the investment bank. And look, the big question is how can they...
Which everyone is, right?
Well, exactly. It's not revolutionary, and how they do that is going to be interesting. And, there's a sense that they might target more or target businesses where they can make more profits, as you expect. Will there be some cuts there? Who knows? I mean, they've currently got a return on tangible equity of about 7%. To get to the group average, that's 12%. That's a big jump, right? So there you might see the most sweeping changes, all within the context of they want to keep this as a global investment bank. And then, on the retail side, likely they'll probably continue to sort of maybe look for opportunistic acquisitions. They just bought Tesco Bank, looking to bulk up that domestic UK bank.
Tom, thank you so much. We'll have plenty more, of course, of Tom throughout the week, because tomorrow we'll also be speaking with Noel Quinn, the HSBC Chief Executive, 5:30 a.m. London time. So wake up for that. Watch us, and then we'll get Tom to provide all of the analysis afterwards, maybe at 6:15. We'll let him sleep in for a bit. Coming up, an influential group founded by Nelson Mandela warns for a catastrophe for humanity unless world leaders take a long view. We'll be speaking to the chair of the elders, Mary Robinson. This is Bloomberg. Now, Barclays surges as it vows to go on a major cost-cutting drive and return at least £10 billion to shareholders in the coming years. China ramps up support for the troubled property sector with its biggest ever cut to a key mortgage reference rate, raising expectations for more aggressive measures to come. Plus, America warns against an Israeli assault on Rafah in a draft Security Council text as concerns grow about the humanitarian situation in Gaza. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. An influential group of global leaders has warned that humanity faces a greater catastrophe without what they describe as long-view leadership from world leaders. Now, the elders have written an open letter warning that the world is in grave danger because of threats including climate change and nuclear weapons. I'm now joined by the chair of the elders, Mary Robinson, who is also the first female president of Ireland and is a former UN High Commission for Human Rights. Ms. Robinson, thank you so much for joining us. Everyone watching now understands that we're in a grave danger. The question is, how do we make the world a little bit safer, a little bit less dangerous? What's your prescription?
Well, it's interesting that the elders felt it necessary to have an open letter calling for long-view leadership, as we call it, which means leadership that recognizes the complexity of issues and is thoughtful about future generations in resolving those issues and has compassion about them. And you might think surely leaders would do that, but actually we're seeing more short-termism, more popularism. We're seeing the influence of social media. The attention span is very short. And, of course, elected representatives, those holding high office, want to get re-elected. I understand that very well. But we do need to address collectively very complex issues. These are the issues that the elders focus on. We call them existential threats: the climate and nature crisis, the pandemic crisis, and the nuclear weapons crisis.
But, Ms. Robinson, there's a line of thought that says, actually, if you're a leader in the thinkers of the free world, then it's just much more difficult to enthrall, to enthuse, and to get people behind you. Is there a problem of communication, or is there a problem of values?
It's both, I think. And in particular, I come back to the influence of social media. We see influencers with big social media following. They may be very empty in their content, but they have big followings. And I think some politicians are copying that. They're trying through social media to be populist, to be very short-term, sometimes to be very angry. We know one particular man I'm talking about. He gives very bad example, but it's followed by leaders in different countries. We saw it in Brazil with Bolsonaro. We see it even in Korea, I'm told. That there's a populist potential leader of the opposition who's using the same tactics. And this is not the way that we need the world to move. We're finding it more difficult to get collective agreement, and yet we need it more. The world is far more threatened by threats that can only be resolved by international cooperation, multilateral cooperation, and yet we're seeing divides in our world, partly because of the conflicts.
But Israel-Hamas has divided, it's extremely difficult for politicians to find the right way forward. On social media, there's a lot of cries to do something, and it doesn't seem that much is being done about it. What do you think needs to happen for successful talks on a ceasefire?
Yes, the elders have been calling for some months now for a ceasefire because we are very, very worried about what is happening to the women and children and civil population in Gaza, trapped now without food, without water, without electricity, without internet most of the time, in great suffering, and then threatened at the Rafah crossing. So it is a very positive move, I think, that the United States now sees the need for a short-term ceasefire, I think they're calling it, in the current resolution that's coming before the Security Council. That at least is a step that recognizes that Israel this current government must listen. The whole world, I was in Munich with a number of elders, everyone was saying, we need a ceasefire, we need help to the huge number in Palestine who are suffering so much in Gaza. And therefore, we need, it's legitimate that Israel defends itself. It's, of course, very important that the hostages are released. The elders are very clear on that. But the attack on Gaza has from the beginning been disproportionate, and it has just got worse. And the population has been displaced over and over again, is now trapped in Rafah, and we must have a ceasefire, and we must get the humanitarian aid in. We must plan for what's going to be the future. A two-state solution is the only way forward.
But why has it been so difficult so far to call for ceasefire, and why have the U.S. not exerted more pressure on Israel?
Well, I think the problem has been this government in Israel, and in particular the leadership of Prime Minister Netanyahu. He has his own personal interests at stake. The longer the war continues, the less likely he is to immediately go be before a criminal court. And he's very unpopular in Israel. I think that there's a certain trying to continue his position. But actually, there's a real recognition now that things have moved in the region. And we talked to a number of high representatives of Arab states. They really want now peace with Israel within the context of a Palestinian state that lives in harmony with Israel and is supported by the region and, of course, supported by the United States in particular and by the European Union. And that is now more feasible. We really believe it's possible, but it needs a ceasefire now in order to literally deal with an appalling, unbelievable humanitarian crisis in Gaza.
A number of countries have also withdrawn funding to the United Nations Relief and Works Agency. Do you worry about that? Is there something that the elders want?
Yes, the elders have been very concerned about that because we know UNRWA. No institution is perfect. And if, as it is alleged, 12 members were part of that awful attack on Israel and the taking of hostages, of course that's completely to be condemned. And they were sacked without due process. 9 of them that are still alive, I think, by the head of UNRWA, whom I met in Dublin very recently, Lazarasi. He's worried that Israel now wants to get rid of UNRWA. Those of us who know the situation in Gaza know that UNRWA is absolutely vital. It's a pity that so many countries did immediately suspend aid because of this allegation, which should be dealt with forcefully and is being dealt with by UNRWA. There are investigations, etc. But you don't stop funding an organization immediately. That's very dangerous. I'm glad that my country not only didn't stop funding, but actually gave more money when the head of UNRWA was in Dublin, and other countries, Spain, Belgium, Norway, etc., have been principled in their approach. Unfortunately, I think the United States is probably no longer going to fund UNRWA, so the funding will have to come from elsewhere.
How worried are you, and how do you explain actually the rise in anti-immigrant sentiment across capitals in Europe, in Germany, in France, and also in Ireland?
That's a good question, because that again is part of not having long view leadership. who are the migrants who leave their country? They leave because they are desperate to get away from conflict, or maybe now increasingly they can't live there because of climate impacts. They are the strong, they are the enterprising. We should have legal pathways for more migrants to come to the parts of the world that are aging, in particular the European Union, because it's good for those countries. But we also have to control, illegal migration or migration that isn't regulated, because that threatens people. And the problem is then populist voices speak up about the other as if the other was not a human being. They don't talk about the stories of these people. They don't understand. But actually, ordinary people, I think, especially if they have experience of migrants coming in, welcome them. And we do need leadership that thinks long view, that thinks of the fact that actually the climate impacts are going to increase people being forced to leave. Conflict is also driving people out of their country. And we have to deal with this in a long view, appropriate way, through pathways of legal migration that are good for countries that have aging populations.
What will happen to Russia after the killing of Alexei Navalny?
Well, I think there was such a sadness in Munich, where 5 of us were there as elders, and we shared the sheer horror and grief at the announcement of that sad death. And it's inexplicable that the body is not being released to his widow and his mother. I mean, this is just really shocking. And it is indicative, I think, of a very ruthless leader who has committed this war of aggression against Ukraine. We had very good meetings about Ukraine, including with Alexei Yermak, the chief of staff, when we were in Munich. And Ukraine needs the financial support, unfortunately, needs the support of weapons to combat this terrible war. And I hope the United States will pass the budget that is necessary for Ukraine.
Is Putin growing even stronger? And would a Trump presidency actually really embolden that?
Well, don't forget that Putin has been indicted for the capture of so many children to bring into Russia. Again, the elders are concerned about that. We're trying to see if it's possible to address that issue. But the International Criminal Court has indicted him. So I think this is part of recognizing somebody who is not just a bad leader, but actually inflicting terrible pain on a neighboring country, on Ukraine.
Mary Robinson, thank you so much for joining us, Chair of the Elders and former Irish president there. Now, the crew of a commercial ship have abandoned their vessel after it was struck by missiles in the southern Red Sea. There have been no reports of injuries on the Ruby Mar cargo carrier, but it's the first time that a crew has been forced to flee since the Houthi militants started to escalate their attacks off the coast of Yemen late last year. Now, let's bring in Bloomberg's Al Nightingale. Al, thank you so much for joining us. I mean, you cover this day in, day out. What more do we know about this attack in the Red Sea?
So the Houthis say that they sank the ship. We've reached out to the company that manages that vessel, and they've not been able to confirm that themselves. But there is every chance that the ship will have sunk, which would be the first time such a thing has happened during this escalation. So that's an important development, and will be on the minds of a lot of the crews that have to go through that stretch of water.
So Al, the European Union has also formally launched a defence naval operation on Monday, basically aimed at protecting some of these commercial vessels. What are the details of that?
Not a lot is known at this stage. The Greeks seem to be leading it from a European perspective, and I think that's kind of important, because what it tells you is, how defensive it's going to be. There's not going to be a European kind of contribution to the attacks that we've seen on the Houthis, because the Greeks will want to ensure that their ships are safe for passage as much as possible. So it will be a defensive thing. It will be more protective than offensive. But the actual details, the number of assets, how it will operate still isn't known at this stage.
Al, thanks so much, Al Nightingale, there with the very latest on some of these Houthi attacks. Coming up, more from our interview with the chief executive of BHP on earnings and the impact of lower nickel prices. That's next, and this is Bloomberg. Now, BHP's first half net income has slumped 86% from the year before. The world's biggest miner says it's writing down the value of key assets due to oversupply in the nickel market. But speaking to Bloomberg, the chief executive, Mike Henry, says the firm's underlying performance remains strong.
In terms of underlying operations and financial performance, it was a really strong half. We had EBITDA up by 5%, net operating cash flow up by a whole 30%. Balance sheet remains strong with net debt at $12.6 billion. And all of that has allowed us to declare an interim dividend of 72 US cents per share. Now, yes, we have had a couple of exceptionals, including in our nickel business. Now, by way of a bit of context, the nickel business is the smallest by some margin business within the BHP portfolio.
Well, that was Mike Henry, the chief executive of BHP. Now, as many as 3,700 jobs are at risk at Anglo American Platinum in South Africa. This after the world's biggest primary producer of platinum reported a 73% fall in profits. Well, let's speak to Bloomberg's Ondiro Oganga. Ondiro, so what's behind this huge fall in profits?
We have seen prices take a nosedive in the last year, and this is because automakers have decided to destock. Some of them are seeking cheaper alternatives, and also there's been a slowdown in the global economy. We saw the prices of palladium fall 46%, rhodium 65%, and platinum went down by 14%. And this is such a change in fortune because 2 years ago, some of these companies were reporting bumper earnings because the prices had nearly doubled due to demand. And also, we're beginning to see that due to this change, the automotive outlook is almost flat this year, and prices are expected to hover around the current level. Because of some of these problems, profits fell by 73% just last year, and they had to reduce their dividends by 81% to 21 rands per share.
So tell us about the impact of the job cuts.
The job cuts are going to be steep because metals are the biggest exports of the country, and these job cuts will take about 17% of the workforce from the company. 600 firms will have their contracts reviewed, and this did not happen in a vacuum. In December, they reported their lowest earnings in 30 years, saying everything that they did to reposition the business did not work, hence necessitating the job cuts and also trying to reposition themselves a bit more competitively in the market in order to save more jobs and save money to a tune of $263 million. And this job cuts come at a very crucial time as South Africa is gearing towards the next general election. And even though we are seeing a drop in unemployment numbers to now 32%, all eyes on the government and what they'll continue to do to bring down unemployment unless they risk losing their majority in the coming elections.
Ondiro, thanks so much. Ondiro Oganga there with the very latest, of course, on what's going on in mining. Coming up, how should companies selling unhealthy foods deal with blockbuster weight loss drugs like Ozempic? We'll discuss the findings of the latest MLive Pulse survey. That's next, and this is Bloomberg. Now, the conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. So companies selling unhealthy foods need to tweak their business models to counter the growing popularity of weight loss drugs or risk alienating investors. Well, that's the conclusion of the latest MLive Pulse survey. And joining us now to go through all of this is Bloomberg's consumer goods reporter, Dasha Afanisava. Dasha, I love this because we all know it, but then it's now with Ozempic, it kind of focuses the minds, I guess, of some of these big company CEOs. So what do investors want the big companies to do?
Absolutely. The message is clear that they want these companies to shift towards healthier foods, which some of these companies would say, well, we've been doing that already, for example, Nestle, but then you'll have others like maybe Mondelez that mostly sells biscuits and chocolate. So they've been talking about switching to healthier foods because more because of regulation trends in terms of advertising and also consumer trends. But now they have this whole new reason to do so.
So how great is the threat?
Well, the jury's still out on that, really, because, of course, these drugs are only really popular in the US so far, and they are really widespread in the US, and they are very expensive, and they on the whole, require injections, although there is an oral version coming through from Novo. So I think that the impact might not be as great as these sorts of surveys would have you believe. Also because some of these companies have been making that health shift gradually.
So how big is the impact also expected to be beyond big food?
It's been really interesting with these weight loss drugs and diabetes drugs, seeing how they impact different sectors. So gradually we're seeing evidence that they actually affect people's propensity to drink a lot and to smoke and other addictions. And there are also reports that it changes how you taste coffee and it makes coffee taste weird. So it's really interesting to see.
Not the coffee.
Exactly. There's a lot of sacrifices that could come if you're on these drugs. They were gradually figuring out how they impact different sectors.
But Dasha, and we've been speaking, to the Nestle's of this world. I mean, there's been so much focus on actually healthier foods by, a certain. Is that the way our tastes are going in general, or is it, just a certain population that's very aware of the risks and that is very focused on, for example, also like working out?
I think it's in general, there's greater awareness. And I think also regulators in some countries, for example, Mexico, there are curbs, there's big obesity problems. So there's been curbs on advertising, changes in labeling. So there's definitely increased level of awareness. But what these drugs allow people to do is to live by the truth that we know that, there are these unhealthy foods, either because of calories or other ingredients, sugar, salt.
Okay, I'm going to put down the chocolate and go for kale juice after this break. There you go. That's like my pledge today. Dasha, thank you so much as always.
Thank you.
Dasha Afanyasava, there with the very latest on Ozempic and actually our wonderful MLife survey on what investors want some of the big food companies to do. Now, Capital One has agreed to buy Discover Financial Services in a $35 billion all-stock deal. The takeover creates the largest U.S. credit card company by loan volume. Now, it also ranks as the biggest merger globally so far this year. You can see pre-market, actually, Capital One down 5.6%, Discover Financial up 11.2%. Now, Barclays shares are also surging this morning after it said it's going on a major cost-cutting drive in an effort to boost returns. Announcing a restructuring, Barclays says it will reduce costs by £2 billion by 2026. The British bank plans to return £10 billion to shareholders over the period. Up next, Bloomberg Brief, Danny Berger and Manus Krani in New York will have the latest roundup of stocks. Of course, U.S. futures retreating a touch. Again, I think investors are a little bit worried over China's economy weighing on global markets, even as we've seen some of the corporate news and earnings providing some bright spots. This is Bloomberg.